People say, well, you can only lose money for 3 years. Not. I've been losing money, how long? How many, 15, 20 years on paper? Kind of nice. Kind of nice not to pay any taxes legally. And so what you want to do, it's not about what you're making. It's about tax planning and offsetting your current income on your day job and having that thing work. So we can be, as long as you're in the pursuit of making money, we're in business.
Why do you want to have a home-based business or a traditional business? Because the tax deductions are vast. They include accounting, advertising, attorney fees, bad debts, bank service charges, books, periodicals, and tapes, car and truck expenses.
You get to write off your car and truck expenses. That's huge. That's about a $10,000 event depending on what you're driving. So you got gas, tires, repairs, tolls, lease payments, auto club memberships, interest on your car loan. Who's financing their car? Interest on your car loan when you're self-employed partially. I mean, you got a day job and you got a thing going on over here. You get to write off your finance charges on your car. Now, if you don't know, guess what? That's $4,000, $3,000. That's a huge, nice write-off. Insurance, parking fees, car washes and waxes, registration, car rentals, and the cost of the car, the extended warranty. So when we add up that car, that's huge. Now, if you don't have a mileage log, guess what? You get to write off zero. Whether you take the mileage method or the actual method, you get to write off zero if you have no mileage log. And what a mileage log is, it tells the IRS, was I conducting business or was I playing around? Picking up the kids from here, picking up the kids from there. So you have to fill this log out. And it says, I was out handing out flyers. I was out canvassing. I was in the parking lot of this apartment complex. It doesn't have to be every stop that you made during the day. It just needs to be a beginning odometer reading and an ending.
Commissions and contract services, convention expenses, display and exhibit expenses, charitable contributions.
Charitable contributions, this is a big category. That means clean out your closet. Give that stuff away. We have a nice little checkoff list. All the stuff you're giving away or getting ready to throw out on the curbside. That's up to $5,000 deduction. So you want to go ahead and take that. Not including your tithes and offerings. That's cash money, and then the money that's coming out of your check for this or for that, for charity. So you got 3 levels of charitable contributions, and all you kind of pay attention to is tithes and offerings. But the others are tax deductible as well.
Dues, education fees and materials, equipment rentals and leases, entertainment of clients or potential clients.
This is a big category. If you're in the real estate industry, so let's go out to lunch and talk about this. Let's talk about that. That's tax deductible. And that includes the tip, the drink, plays, sporting events, going to the Kings games, buying a series and giving those to your clients. That's tax deductible. So you want to write that off. Freight, postage. You can write off your UPS, stamps, and couriers. Gifts to clients. That's a big category. Can your family members be your clients? Can they give you referrals? You're the best. Your mom is the best. That's the best lead you got working for you. My baby does this, my baby does that, right? Does mom get a gift from you every year? Mother's Day. Well, she gets Christmas, right? Now it's tax deductible. Now the limit here, we got birthdays, Chinese New Year's, weddings, anniversaries, Christmas, housewarmings, baby showers, graduations, Hanukkahs, all that. Now the gifts need to be $25. Now what can you give for $25? Not much, right? Unless it's a corporation. A corporation, a gift can be any amount. So guess what? You may have a corporation and your business. And I'll say, what's your corporation name, girl? Okay, now I can give you a nice gift. Now, if I don't have a corporation, I can do gift cards, and they're $25 a gift card, right? Now we're under the limit. How many do I give her? It's up to you, right?
Insurances, pension and profit sharing plans, home meetings, private business receptions.
Here, that meals and entertainment is different than a private business reception. Meals and entertainment is 50% write-off. Private business reception is 100% write-off. So I want you to keep those separate. We have it separated in your binder. Okay, so you ain't throwing that party for nothing. You're looking for business, right? It wasn't something that you just went out to go eat. It's office furniture. Let's say you're in a business where you're in a network marketing business and you've got to use your VCR to throw in a DVD. You need your DVD player to throw in a DVD, right? Okay, you need the TV, that big screen TV to watch it, right? And you got the leather couch and the leather armchair and this and that. You got pictures on the wall and you've got that front room is laid out. Laid out. Guess what? It's all tax deductible. Why? You get to write it all off. That's the couch, pictures on the wall, plants, flooring, curtains, lighting, everything in that room. It's tax deductible. That's your PBR room, I call it. And then you have an office. And your office, everything in that room is tax deductible. That's a clock on the wall. That's the pictures on the wall. All of that. And so we have a nice little list in the binder for you to keep up with all that stuff. Okay?
Interest paid out, licenses and permits, laundry and cleaning, maintenance and cleaning services, office equipment, office furniture, office supplies, professional services, legal fees, promotional materials, property taxes, publications, building and equipment repairs, rent or mortgage expense, subscriptions, purchases of inventory, shipping and handling, sales tax, telephone and pagers, tools used in trade or business, travel expenses, uniforms purchased and cleaned, utilities, wages paid out, and other expenses. Above and beyond business deductions are your home office tax deductions. Those include mortgage interest or rent, property taxes, repairs around the house, home or renter's insurance, repairs on appliances like air conditioner, water heater, plumbing, electrical, roofing, etc.
People just think it's repairs to their business equipment that they get to write off. You get to write off repairs to the house. So water heater, appliances, plumbing, that's your, I had the guy say, you mean tell me I get to write off when I fix the dishwasher? Yeah, you do. Any repairs you do around the house, you're going to keep that. And we have a spot in the book. You get repairs to the office stuff, and you have repairs to the whole house stuff. The whole house stuff is based on the percentage of business use of the whole house. So if you just got the PBR room and the office upstairs, then we got 2 rooms out of 7 that are tax deductible. So 2/7 of everything related to that house. Or if you're like me and you've got 4 rooms out of 7. So you say, honey, you need your own office because you can't share space with me. So he goes in that room, you go in this room, then you got a library, and then you got your PBR room. So you got 4 out of 8, 50%. Okay? Condo or association fees, utilities, lawn care and landscaping, alarm system, pest control, household help, that's kids 7 years or older, and the cost of your home. So if you're not in business for yourself and you're paying for allowance, you need to switch that. Not pay for allowance. They're tax deductible. They're going to clean. They're going to take care of the house. They're going to take care of the home office, what they're taking care of.